Good afternoon. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is October the 6th, 2009. Today's topic is how high gold. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Good afternoon and welcome back to my abode. Glad to talk to you again. Quite a breakout in gold, wasn't it? I just thought I'd make some comments on it because there's a little bit less than meets the eye. And let's talk about that a little bit because we've had some discussions in the past. I'm going to go directly to the gold chart and we'll start getting into the details. Let's do it right now. The first thing I want to point out is this is just simply an update of the old chart. As the summer progressed, we put in the expanding, broadening wedge at the bottom. We also put in the triangle this fall. In July or so, July and August, we noticed that there was a triangle forming, and lo and behold, it certainly did form. And then finally, one of the things that I had been commenting on is that there would be a breakout here, and the question would be, how high would this thing go? Now, one of the things that you'll notice about all of this is I did not put in an inverted head and shoulders pattern. I don't believe that an inverted head and shoulders pattern especially would be appropriate at the top of a formation. An inverted head and shoulders pattern occurs at the bottom of a formation, and then a regular head and shoulders pattern would occur at the top of a formation. So I've scrapped that idea pretty much. Now, I'm not going to get any popularity points for that. I'm also somewhat scrapping the idea of the broadening wedge that we've got at the bottom. The pattern of the broadening wedge suggested that we might go as high as about 1,300 or so in gold. I'm not so certain that that's what's going to transpire here. Part of the reason for that is, according to Tom Bulkowski in the Encyclopedia of Chart Patterns, this particular pattern has about a 37% failure rate, and I'm not too keen on trying to promote something that has as high a failure rate as that. So let's move on here. Now, by the way, if it does happen, so be it, but let's talk about realistic expectations for a moment, and let's get back to the triangle formation. Now, one of the things that you'll see here is that I've got a 5-wave pattern. We had 1, 2, 3 occur by late February of this year, and then we did a pretty big pullback into April, and then since then, mainly gold has gone sideways, very frustrating for a lot of people, but by July or August, we were able to discern a pattern of a triangle, which I've enumerated here, A, B, C, D, E. E is the apex or the bottom of the 4th wave. So we have a 4 there, and now we're working on wave 5. In other words, for the time being, this is the final wave pattern. So we're not talking about anything that's going to go on to the moon. We're simply talking about here's something that has some measurable limits. Let's talk about those measurable limits for a minute, and then we'll decide on whether this thing, by the way, for those of you that are in it, congratulations. This was a fine little move that happened here. It took a little doing, but nonetheless, it happened, and my hat's off to you if you're long gold. So let's talk about where do we go. Well, the minimum in a 5th wave generally would be the widest width of the triangle, which would be from 1,007.70 down to 859.90. That is about 147 to 148 points. So the minimum is if we take the bottom of E, which is at 930, at 148 points, you get 978. You get 1,078. So in other words, we have the potential right now gold closed at 1,042, so we've got a potential for another 36 points here as a practical minimum, and I don't think that that's there's anything more to be said about it than that would probably be a minimum, so somewhere around 1,080. But let's talk about what the maximum is. Is it 1,300? No. Is it 1,200? No. Here's why. If my pattern recognition is correct, and that's kind of a big if yet, but let's make that assumption for now. Wave 3 is roughly 206 points long. Now, Wave 3 cannot be, and it is smaller than Wave 1. Now we can redraw this and maybe reposition Wave 1 and 3. That's a possibility, but using this pattern right here, Wave 3 is 206 points long, and it cannot be the smallest wave in the pattern. So let's add about 200 points, maybe 206 points maximum, to 930, and what do we have? We've got about 1,130. So 1,136 would be the maximum. Now, if we went higher than that, I would suggest that I drew waves 1 and 3 incorrectly, and we'd go back to the drawing board. But having said that, right now I'm going to stick to this pattern for the time being and let the chips fall where they may. What we might end up with is a little bit more than that. But given the current view of this pattern right now, what we're looking at is a range for this final move up in gold to be somewhere between 1,078 minimum and 1,130 or so maximum. It could fall short of that. So this is not an absolute, but rather a set of guidelines that I'm using to give you a realistic expectation of what might happen with gold. Now, one of the other things that I want to point out here is that the dollar is making a base. It may not take too long for the dollar to come out of that base. In fact, it's making a bullish wedge pattern, which I've talked about in the past. We'll do another video on that very soon. But when that breaks out, I expect gold to be ending its rally pattern here and starting to reverse back down. So there's a very direct inverse correlation between gold and the dollar, and I just want you to be aware that we could have trouble if the dollar starts rallying. So far, it's not happened. I've made the comment buy the dollar a couple of weeks ago. So far, I'm wrong, but not horribly so. But I just want to point out that the dollar is building that base, and I don't think it's going to be very long before it takes off. So right now, where we stand, let's go back to the chart. We have probably about, I would say from today's high, 1,043. We've got another roughly 33 points to go as a minimum. We have possibly about 90 points to go as a potential maximum. So we don't have very far or very long for this thing to go. Now, just hold your pants on here. I don't want you to get too upset with me. This is not the pattern that's going to the moon. I believe that pattern is probably going to happen. Let me take a stab at it. Let's say in the year 2015 or 2016. So I think we're going to have that pattern where gold goes to 5,000, possibly a lot more. But right now, I think gold has a limit on its rally, and don't get too stoked up about going to the moon at this point right now. There's some natural limits being imposed by the pattern itself, and we need to respect that. So for those of you that you would like to follow gold along with me, I have a daily newsletter where we track GLD, the ETF, and You can subscribe to that newsletter. Just write me, Tony C, at thepracticalinvestor.com, and or just get on my website, www.thepracticalinvestor.com. It gives the details. You can email me or the website address, and we'll be glad to furnish you with the information on how to subscribe. So in the meantime, I hope you all have a great fall season. I hope I haven't put the kibosh on your expectations of gold going to the moon. I just want to point out that, technically speaking, this rally has some limitations, and we need to respect that and make sure that we're not caught on the wrong side when it does reverse. So, in the meantime, have a great evening. I look forward to hearing from many of you that wish to inquire about the newsletter, and until our next video, have a great day and do the right thing.